Good day, everyone. Trust we all are doing good. I'm Tio, and welcome to my day 44 video of the 100 Days of Technical Analysis Challenge. So, GBP card, that's what I got on my list today. Let's dive right into it. Now, like I try as much as possible to do always, I try as much as possible to give the general directional bias of any currency pair I'm looking into before I start to deal with relevance in price or break down charts to be precise. So let's dive right into it. So GBP card, we had this massive bearish move to the downside. Then after that we had this move to the side, like just sideways. So this is a possible impulse correction and impulse pattern. Like I always do, I try also to explain my concepts. So an impulse correction and impulse pattern is based on the nature and structure of the market. If we have an impulse to the downside and we have a correction to the upside, we should be expecting the next impulse to the downside. And same thing applies to an uptrend. So with this known, I actually know that possibly the next phase of the market is to move down to the downside. But I can't literally make a decision on that because of there is a range bound here. And looking at this range bound, there's something quite interesting about this range bound. So on this range bound, what do we have? We have a head and shoulders pattern, and also we have an inverted head and shoulders pattern, a pattern within a pattern. So with this the left shoulder, this is the head, and this possibly the right shoulder forming. And also within this range bound, we have the left shoulder, the head, and this right shoulder here. So one should play out before one, or one would be invalidated before the other one gets to take play. But on the safer side, we know we are in a general downtrend, so we should be expecting the head and shoulders to play out. Now, let's deal with relevance in price. Looking closely at price here, what do we have? We have this range bound, this minor range bound here. So we have this minor range bound right here, and in this minor range bound, we have a head and shoulders pattern right here. So we have this left shoulder, the head, and the right shoulder. Brilliant. And with this, I will be looking to go short on GBP card because of this head and shoulder has a pattern within it, and it's a very common pattern I use on the charts, which is this right here. We have an M formation pattern right here, which a retest to the net line is currently ongoing. Now, with this known, I can now look into diving into price projection or understanding what the price will do next. So, like I always do, I say when an M pattern forms, we must expect a retest back to the net line before we see price project in the expected direction, and the same thing applies to a W pattern. So first, I need to mark out my net line. So picking up the ray tool, yes, that is the net line. I've marked out the net line. I can switch back to a line chart. I mean a candlestick chart. What would I be looking out for next is the fibs. What do the fibs tell me? Now, the net line is in between the 61.8 and the 50% fib level. I would be marking that out also. So right here. Wow. Okay, let me take my magnet off. Okay, so right here, I'll be looking for price action at this area of structure right here. So I can now go to the daily time frame for further confluence. So on the daily time frame now, we can see that the weekly fibs also align perfectly with the daily structure. So I'll be waiting for this. This is an indecision candle. If this next candle does close bearish, we would have a three pin pattern. And this is just like a confirmation for us to go short on GBP card. So my bias would be to go short if this current daily candle does close bearish, or it doesn't move above this week right here, because this indecision candle says a lot about price. Now with that said, I can now pick up a trend line. Trend lines are to mark out structures in price. They really tell a lot of story, but you don't make trading decisions off or based them. Yes, so this will be the structure right here, and we can see we had impulse correction. We'll be expecting another impulse to the downside to complete the whole M pattern formation, the next impulsive phase to the downside. Now with that known, I can now reset my chart. Yes, so We expect this is an impulse, this is a correction, so we expect the next impulse back into the minus 27.2 fib level, which aligns perfectly with the previous area of structure. Nice and massive target. So to the 4 hour time frame now, on the 4 hour time frame, on the 4 hour time frame now, we can mark out this structure properly, and this is an impulse, a correction. I can now mark out this counter trend line right here. So I'll be expecting a break to the downside, and we can see here we have this minor M pattern. Price came back for a retest, and price is at this previous area of structure. So to the daily, to the 1 hour time frame, which is the last time frame I always check, we can see how well this structure is forming. Some very choppy, and it has literally no direction at all. So I'll just be waiting for price action here, and let's see what it does. If it does break out to the downside, I would follow it. I would be reacting to price and not predicting. If it does move to the upside, I would still wait for reaction, because this is a nice zone above here. It might still trade into this area right here before we see a short to the downside fully. So that is my bias on GBP card. I'll be looking to go short on GBP card. If you do have a bias in alignment or against my bias, please do drop it in the comments down below. I would love to hear it. If you'd love me to look at any pair for you in my next video, do drop it in the comments down below. And also please do like and follow. Thank you.